Good afternoon, sir. My name is Julekudi Savitri. I am from accounting class D. My student ID is 1810426414. Setting up the general ledger. Accounts used by a business are kept on separate page or card in a book or file called a ledger. It is important for a number of reasons. This creates a record of the impact of business transaction on each account used by a business. It also helps managers easily find the current balance of the specific account. Posting is the process by which random transactions become organized in a manner according to accounts. Posting the process of transferring information from the journal to individual general ledger account. The general ledger provides up-to-date balance for each account, including accounts payable and receivable. In a computer system, electronic files are still referred to as a ledger or the ledger accounts. Managers use ledger to obtain summarized information. General ledger, a permanent record organized by account number. Ledger account forms. The forms are divided by the number of columns into which a dollar amount goes. Debit and credit amounts are posted from journal entries to the first two amount columns. The new account balance is entered in one of the last two amount columns. The type of account determines which balance columns to use. Ledger account forms. The accounting subsidiary used to record financial information about specific account. The fourth step in the accounting cycle, posting. Posting shows the final impact on an account, which is why a ledger is sometimes called a book of final entry. Posting intervals are determined by the size of the business and whether the accounting system is computerized or manual. The posting process always remains the same. The process is always performed from left to right. The first step in the accounting cycle, posting. 6 steps required for posting journal entries to a ledger. The first, enter the date of the journal entry in the date column. And the second, the description column is left blank but can be used to write the source document number. And the 3, enter journal letter and page number in post-ref column. Next, enter the debit amount in the debit columns, and then compute the new account balance, and then enter the account number in the journal post-ref column. And last, repeat steps 1 until 6, the credit part of the journal entry. The first steps in the accounting cycle, posting. General journal, cash in bank 25,000, Krista Vargas Capital 25,000. Cash in bank increases 25,000 and Krista Vargas Capital decreases 25,000. General ledger account balance. A new account balance is computed each time a transaction is posted to account. When the existing account balance is a debit and the amount posted as a debit, add the amounts. The amount posted is a credit, subtract the amounts. General ledger account balance. a new account balance is computed. Each time a transaction is posted to an account, when the existing account balance is a credit and the amount posted is a debit, subtract the amount posted is a credit, add the amount. A ledger account with several postings. Cash in bank, account number 101, increases 25,000, in decreases 500, amount 24,500, decreases 125, in amount 24,375. A ledger account with a zero balance. In account receivable, account number 1010, increases 200 and decreases 200, amount 0. The fifth step in the accounting cycle, the trial balance. Necessary steps to keep an accounting system in balance. Calculate the balance, find any errors that may have occurred, use general rules and guidelines to narrow down where the mistake was made, correct the mistake. The first step in accounting cycle in trial balance, sum of debits, sum of credits, and proofing the ledger. Proofing the ledger, adding all debit balance and all credit balance of ledger account, and then comparing the two totals to see whether they are equals. Proofing the ledger. If the totals are equals, the trial balance is a balance. If the total are not equal, and up the columns again. Trial balance, a list of all the general ledger account names and balance. It is perfect to proof and the ledger. Finding and correcting errors. Example for a transposition error. $469 was written as $496. Transposition error occurs when two digits within an amount are accidentally reserved or transposed. Examples of a slight error. 2,500 was written as 2,500. Slight error occurs when a decimal point is moved by mistake. Correcting entry procedure. Post the entry in the ledger the same as any other entry. Use the word correcting entry in the description column. Correcting entry. In entry, made to correct an error in a journal entry discovered after posting. Making a correcting entry to the journal. Utilities expense increases 100. Maintenance expense decreases 100. Posting correcting entries to ledger accounts. Maintenance expense, account number 505, increases at amount 600, increases 100, amount 700. In utilities expense, increases 125, increases 100, amounts 225. You have just completed a trial balance and the columns are not equal. List the step that you would use to find the error. Steps 1. Check the addition in each column. Step 2. Find the difference between the amounts in the debit and credit columns. If the difference is 10, 100, you probably have made an addition error. Step 3. If the difference found in step 2 is divisible by 9, you have probably made a slight or transposition error. Step 4. Check to see whether any of the general ledger account has a balance equal to the difference found in step 2. You have just completed a trial balance and the columns are not equal. List the step that you would use to find the error. Step 5. Check to see whether any of the general ledger account has a balance equal to 1/2 of the difference. This would indicate that you may have moved a debit balance to the credit side of the trial balance or vice versa. Step 6. Check the accuracy of the general ledger accounts by recalculating the balance. Step 7. Check the individual posting from the journal to the general ledger to make sure you have correctly posted the amounts and posted debits as debit and credit as credit. It is possible to have amount in both the debits and credit balance column of a 4-column ledger account. No, the balance column exists to show the cumulative effect of debits and credit to an account. If debit exceeds credit, the account will have a debit balance, which is inserted the debit columns. If credit exceeds debit, the account will have a credit balance, which is entered in the credit column. Okay, sir. Thank you.